Hey guys, Damien here, Damien Medici, the Melbourne Broker. Today I thought we'd shoot a little bit of a video around, this is typically what I would do in an interview when I'm speaking to, it's generally a first home buyer, and you'll see what I run through now as why I've based it on a first home buyer. But this is exactly what I would do if I'm meeting you for the first time. So I'd like you to be privileged to the way an interview would go, so you're informative, or you're informed around the breakdown and just the way it all works. So I've worked on a purchase price of 600. The reason I've done that is because if you are buying a property in Victoria, there's no stamp duty that's applicable if you buy up to 600. And that's generally the mark that we work around in terms of where first home buyers find themselves looking for a home. What I will do later on is I'll probably talk and I'll educate you on if you do buy for 650 or if you do buy for more. But for the purpose of today, we'll work on 600. So what we're doing is if you buy for 600, there are no stamp duty costs. There are some government costs, and there are other associated costs with buying the property. There's generally a conveyancer, which you'll need. There's outgoings and so forth. So I work on a buffer of 5,000, and the reason we do that is to make sure that you're covered and you don't walk out of settlement day with no money at all. So it's generally a little bit less, but you're covered by that. So basically you got 600 to buy the property, 5,000 is for the cost, so total 605. Now you can see up here I've put bank lend 95%. Banks will lend up to 95%. There are some banks that do a little bit more, but again, for the purpose of today, not going to all the options and just generalising it all, we're going to work on 95. That's including what's called lender's mortgage insurance. So if you do buy, mortgage insurance is around about 3%. These are approximate figures, but again, you're going to be covered. There won't be more. So basically what that means is 95 less 3 is 92. So 92% will go towards the purchase. So out of the bank that they're lending you, 92 will go towards you completing the sale. So that means 552. So the gist of what we want to get is how much you will need as a first home buyer. So basically we've got 600, 605 is the cost. The bank's giving you that. So you will need 53,000. Now, that's not going to be your end loan. That's your base loan before you've added mortgage insurance to it. Again, I've worked on a buffer. So if you're looking at about 16,000 is a total LMI. So your end loan will be 568. So again, you got the base plus your mortgage insurance, you got 568. I've worked on a 3% interest rate. There are lower rates, but again, so you're covered. Your repayments are $2,395 a month. Now, if you do buy a property that you build, it's either brand new or built, the government will give you $10,000. It's obviously you're going to be eligible for it. So your 53 now comes down to 43. The government grant, which is only for building brand new properties, it only came out yesterday. That's 25,000. So if you're eligible for both and you're a first home buyer, you can get into the market with as little as 18,000. There are certain requirements around genuine savings, which I'll discuss in a later interview, but that's basically the breakdown on how a loan would work if you were to buy a property for 600. Thanks for watching.